manpower also for the he has to employ a new manpower for the effective auditing procedure. If it is a big organization, he has to verify the each and every transactions and the books of our accounts also will be more. So he has to employ the new workers or the new employees for the his auditing procedure. So if we understand if it is a small organization, he has to plan accordingly with the manpower and the equipment and auditing procedures to be followed in the auditing process. So that is the first step for an auditing procedure is understanding the client's business entity. And also next establishing the terms of engagement, and also after understanding he has to establish what he has to establish the terms which are in which terms he has to be appointed. Either it is a company, it has to follow the Companies Act 2013 rules. If it is an partnership firm, he must be follow the Partnership Act rules and regulations. If it is a non-trading concern, he has to follow the Non-Trading Cooperative Societies Acts and on which motto they are establishing their business. So he has to establish the some terms of engagement. So first of all, first step is understanding the client's business, and the second step is establishing the terms of the engagement. And third step is about the risk assessment and identifying the key audit areas. What is the risk involved in this auditing procedure? He has to follow and he has to obey the some rules and procedures to be followed. If we do beyond the limits, it might be risk to him. So whether it is going to be happen or not. So he has to analyze that. And the next step is about the developing an audit plan and audit program. First, he has to understand and he has to establish. Then he has to examine the risk assessment. Then only he has to develop an audit plan and audit program. So if we do not follow the above steps means the understanding, establishing, and the risk assessment. He might not get the good planning of the audit procedure. So he has to plan before he has to going to step into the auditing procedure. He has to follow. He has to understand. He has to develop a plan. Then only he can be perform better auditing procedure in an organization who are engaging him for the auditing process. So that is the audit plan is the sequential steps and the procedures to be followed to be undertaken in the auditing process for the successful auditing procedures. So this is the about the developing of an auditing program. And after his planning, he has to collect the evaluating audit evidence. After planning, what he has to do, he has to collecting the evaluating audit evidences. Then only he can be uh, execute the audit program. Otherwise, after planning, if we in our daily example also, if we plan and if we not collecting the what are the information regarding to attaining that plan, it is be useless that plan. So he has to collect the evaluating evidence, auditing evidence. He is following the auditing procedure and he is developing an audit planning. So he has to collect the evaluating audit evidence and also testing the internal controls and verifying the financial data. He has to control test. Why he has been appointed in the previous classes we discussed about the examination of the financial statements. Independent examination. We use that word independent because he is not accountable to any single person. He is accountable to the shareholders, he is accountable to the board of directors, he is accountable to the general public and the investors and the stakeholders who are engaging with the company or the business. So he has to be uh, follow. He has to control and verifying the financial records, each and every record, each and every data he has to test. Then forming an audit opinion and preparing the audit report. And final step, it is your last chapter, and we will discuss in detail in upcoming classes about the audit report. So first, before audit procedure start, he has to understand, then he has to establish the terms and engagement, then he has to risk assessment and identifying that audit areas and the developing of audit program and collecting and evaluating the audit evidences, then testing and internal control for the verification of books of accounts and forming an audit opinion and audit report. This is about audit steps. And also next, commencement of audit. How an audit program is going to commence. So it is acceptance of audit engagement and preliminary discussion with the client. Acceptance of audit engagement and preliminary discussion with client. Acceptance of audit or commencement of audit will start with the acceptance of audit engagement and the preliminary discussion with the client. Who is client here? If shareholders appointing an auditor, the client is shareholders. If board of directors appointing an auditor, the board of directors are become a client here. So acceptance of the audit engagement involves the preliminary discussion with the client, and also in continuation with that, understanding the client's financial structure, internal control, and risk areas he has to thoroughly examine. Then only he can do a audit plan accordingly to the nature of the business or the financial structure of the business or internal control of the business, and also reviewing the audit previous audit reports and the management letters. So uh, it will give a what structure they are following and what are the loopholes arised in the previous auditing procedure and what is how they are maintaining their accounts can be done with the reviewing of the previous audit reports. So in the if it is already existing a business, if it is having the previous audit report, he has to go with the review process of the previous audit reports. Then only he can get an idea about the what business this is and what are the nature and what financial transactions are they are dealing with. They can easily understand. So it is about the commencement of an audit and also audit planning. So what is audit planning? Setting an audit objective and scope and identifying the key areas and planning, coordinating and developing. So audit planning is divided into five categories. First thing, setting audit objectives and identifying key risk areas, the planning the audit lifetime and also coordination and the development. So we will discuss in detail about about it in the audit planning. So what is audit planning? It is a systematic uh, plan. It is a systematic procedure how audit should be done in the predetermined course of time. So if audit planning is properly designed, the auditing procedure will be conducting in smooth way. If audit planning is not properly design, it will be difficult to conduct auditing procedure and some frauds or the errors may happen in the auditing procedure. So setting audit planning is playing a key role in the entire auditing process. So how to do and when to do and what are the resources we need and how it is going to be start. It is a predetermined course of an action. Planning is nothing but it is a predetermined course of an action to conducting any work. So in the auditing also it is a predetermined course of action to conduct auditing procedure of financial statements and it involves setting audit objectives and scope. The first step indicates about the audit planning is setting up audit objectives and scope. What are the objectives of audit? It is a sequential verification of books of accounts and the books of financial statements to be whether they are maintaining accounts properly or not. It is a sequential examination of books of accounts. And what is the scope of audit? It is limited to the concerned liabilities and it is having the Companies Act and the auditing standards. It is having the scope up to the limit of the company's transactions and the company's act and which act are they are following. They are limiting their scope up to them. So it is an objective and scope. So setting an objectives and scope is the audit planning first step. If this step followed, then only the remaining steps are depending upon the audit objectives and the scope. And the second step is about identifying key areas and materiality levels. So what is the identifying the key areas? What is the key areas of the materiality levels? So audit procedure is following that. Uh, what are the areas they have to go for the verification? He has the authority and the power to ask any books of accounts. He has to power to ask vouchers. He has to power any records of financial statement. He has to verify the bank accounts of the business. So he is having powers and he is having the authority to ask and demand the books of accounts at any time. Yesterday we discussed this topic. So it is identifying the key areas in which areas he has to go. He can decide. So audit planning involves the identifying of the key risk areas. If financial fraud mainly happens, misappropriation of the misrepresentation of the cash, and also the goods, misrepresentation of the goods or the misrepresentation of the asset. So first he has to go with the what are the risk areas involved in the auditing. That is cash account he has to go thoroughly. In addition to the cash account, he has to compare the balance sheet also for the auditing procedure. So bank account and the cash account and the assets and the what are the purchases and sales proceeding during the financial year. So he has to identify these key areas, then only he can easily go with the remaining process of the auditing. So first setting objectives and scope, and second step is identifying the risk areas and materiality levels. And the third step involves planning the audit timeline and resource allocation. What is the timeline of the audit and what are the resource allocation? He has to plan according to his work environment. So if our auditor is going to a big concern or sometimes he has to appoint it for the small business organization also. And sometimes he has to go for the partnership firm and the cooperative societies and non-profit organizations and even government organizations also he has been appointing for the auditing procedure. So based on that business nature and the timeline and the resources he has to develop. He has to plan according to the timeline of the auditing planning. So the planning involves setting an objectives and identifying the key risk areas and also planning the audit timeline and resource allocation. These are the three steps important and the following of these three steps and the coordinating with the audit team and client management. If audit as if auditing procedure has to complete without any disturbance, the coordination is the key to conduct auditing procedure. Without coordination or the communication between the clients and between the team, the auditing procedure cannot be successful in the within the time framework of the time. So he has to coordinate with the audit team. Based on the uh, size of the business, he will come with a team. The team is must be coordinating with each other. If team is not coordinating with the auditor or each other, the audit procedure may not successful, and also it may be deviating to the certain important things which are uh, framed by the auditor. The auditor having some objectives and some scope, be beyond that scope they do not go into the auditing procedure. He has to go with the what is the scope and what are the objectives. So about each and every transaction they have to be coordinate everyone in the audit team, and from that audit team also if any uh, miss conduct of the accounting procedure, they may demand or they may ask for the management about the any misrepresentation in the books of accounts. They can ask the management or they can ask the client who are appointing him. This is about the coordination. So it is playing key role. And also the final step in auditing planning is developing the audit strategy to address the identified risk. So developing the final step is developing the audit strategy. If the audit strategy is not developed the well, he may not complete the final audit planning step. With this, that audit planning steps will be completed, and it is addressing the key areas which are identifying the second step there to follow with the audit planning. So I'm repeating again, audit planning involves setting audit objectives, identifying key risk areas and planning and the audit timeline and coordination, and also developing the audit strategy. These are the audit planning steps, 5 steps involved, and you may expect in the long question or short question for the examination point of view. And also audit program. It is a detailed checklist of audit procedures to be followed. What is audit program? It is a detailed checklist of audit procedures to be followed for the auditing process. So audit checklist and the audit procedure involves audit program, and also specific needs and risk profiles of the client to be addressed. And also it includes the verification of assets and liabilities and income and expenditure. So each and every transaction involves in the accounting books. The auditing program will be undertaken for the completion of the auditing procedure. So it is including, we discussed about the bank account, cash account, each and every asset account, liability account, and income and expenditure account for the uh, audit program completion. And also continuous monitoring and updation of audit progresses. So continuous auditing and the continuous monitoring and updating of the audit progress has to be followed for the auditing procedure. So these are the about the audit programming process. Uh, we discussed about the commencement of audit, what are the procedures and steps involved in audit, commencement of audit, audit planning, and also audit program. And in your examination point of view, you can have in the competence of audit, what are the competence and the uh, follows to be successful in the auditing procedure, you might have to be followed. Okay. So audit process. Audit process is involving about the detailed steps about the what are the procedures to be followed. It is evaluating the evidence and forming the conclusion about the audit reporting. And it reports is basically two types: clean report and qualified report. We in the upcoming classes we can discuss clearly about the audit report. And so model format of audit reporting. What are the audit reporting format for the valuation of the auditing procedure and the verification of books of accounts? There are key areas about cash and bank and fixed assets, revenue, expenses. We discussed already about this. Cash and bank, it is a major, uh, what we can say, it is a major uh, transactions involved with the cash and bank in the auditing procedure. If any payment is made with the cash, they have to maintain a voucher. If any payment made with the check, they have to show the voucher as the bank statement. So these are the two areas of the object auditing procedure. What is the cash and bank? We have to be follow some rule procedures for the verification of cash and bank books. How cash and bank books to be verified? Verify bank balances. First step is for verification of the bank and cash transaction, they have to verify about the bank balances and BRS, bank reconciliation statement. It is prepared to know the balance as per the cash book when cash passbook balance we if we know. If we want to know about the audit balance as per the passbook, we need to balance as per the cash book and some reconciliation transactions about it. With that bank balance and cash balances, we may know about the cash and bank areas. And it is also we need cash account and cash account nothing but cash ledger and the bank account nothing but bank ledger and bank statement. And who are the responsibility for this auditing procedure is audit staff. So with this cash and bank balances. They may know about the cash and bank balances and they are comparing with these balances with the financial statements. In the cash column and the bank column, what is the balances they are reflecting in the trial balance. From the trial balance, the cash and bank balance are reflecting the balance sheet. Whether there is any misrepresentation or misusing of the cash, they may have to be uh, verified with the proper evidence of vouchers or receipts and the bank transactions and the bank statements with the help of bank passbooks. And also in case of the fixed assets, in the same way cash and bank balances, there is need of the verification of the fixed asset. How fixed assets to be verified? Physical verification and depreciation check. How fixed assets you have to be verify with the physical verification only. If any furniture is there, that is a fixed asset. If any machinery is there, that is a fixed asset. If any building is there, that is a fixed asset. So these fixed assets have to be verified with the help of the physical verification only. Physical verification and how depreciation is charging is whether it is charging straight line method or diminishing balance method. There has to be verified. If straight line methods they are following, what is the provision for that depreciation account and how they are using for the upcoming asset purchases. Whether they are purchasing assets with that provision balance or the depreciation amount, or they are written offing and they are keeping aside and utilizing for the business working uh, operations. Are they are following any rule? Which rule they are following about the straight line method or the diminishing balance method, and also fixed assets uh, register and about the invoices they has to be follow for the verification of the fixed assets. They has to follow the register, fixed asset register and the invoices about the fixed assets. Then only they can verify. And the revenue nothing but income. And the major revenue may come with the help of with the transactions of the sales. If the sales transactions are increasing, the revenue also has to be definitely increasing. Which type of sales they are proceeds? If they are sales proceeding with the help of cash sales they are sales doing or the credit sales they are doing. If credit sales are doing, what is the amount has to come to the business and what are the values of the debtor. If the debtors are increasing, there is no liquidity of the cash. What is the about the debtors and what is the bad dates in that debtors and what are the provisions for doubtful debts. The auditor has to follow thoroughly about the debtors column. And also that if they are doing doing sales for cash and how they are taking cash, whether taking the bank through the check, they are taking payment or they are taking cash payment. So for that, they has to again check the bank balances and the cash balances and the other invoices according to the nature of the transaction. If it is a cash sales, if it is a credit sales, based on the nature of the transaction, he has to verify each revenue records for the transaction verification of the financial statements. And also, he has to sometimes go with the sales register because every sales proceedings will be recorded in the first sales register. From that sales register, each transaction is recorded into the journal. From that journal, it is recorded into the ledger. From that ledger and the final accounts, as we know about the accounting cycle. So first sales transactions are recorded in the sales register. He has to verify the sales register and the other invoices. And also in case of the expenses, we discussed about cash and bank balances and fixed assets and the revenues and the other expenses is other expenses about the business transaction. The check majorly expenses are spending with the evidence of the vouchers or the receipts. If the vouchers or the receipts are proper evidence, then only the expenses as considered as a genuine expenditure. If there is any expenses about the fake vouchers or the fake invoices, if they proceed, that transactions are reflecting in the financial transactions, and auditor has to uh, verify if it is the genuine receipt or not. And in the now in the present days, expenses receipts include the GST bill number. With that bill number, also auditor can verify the if it is the genuine bill or fake bill. Also, they can verify. So, expenses of the vouchers of authorized vouchers they can verify with the auditing procedure. And of the payment vouchers and the bills, expenses nothing but and spend to if we spend for the transaction, the vendor has to give us a voucher. If that voucher is a genuine or not, if we giving the proper amount or not, and if it is signed or not, it is a taxable or not, he has to verify. Then only the true expenses value he may get. And also generally expenses are categorized into two types, that is cash expenditure and the revenue expenditure. If cash expenditure is recording, it will be going into the assets, fixed assets. If it is a revenue expenditure, that is comes under the normal recurring expenditures. So he has to verify. And the most important is thing is inventory. Inventory. How inventory watching or inventory verification has to be done. In the auditing procedure, inventory is nothing but stock. In accounting terminology or the auditing terminology, inventory is nothing but stock. How the physical stock is available in the store. He has to verify. He has to verify with the books of accounts and the physical stock available in the store or in the business. He has to verify. That is about inventory physical count he has to follow, and the valuation of assessment and which type of material issue they are following. If they are following FIFO or if they are following LIFO or if they are following simple average weighted average, he has to verify in the books of accounts also. If the inventory usage is arriving, that business might showing that less profit, and they are also uh, entitled to pay the tax, less tax. So their plan to avoid the stock in the uh, sorry, the stock has to be shown in the balance sheet. They try to reduce it. With that, they may get the benefit of tax. So auditor has to verify the inventory and the inventory management about the each inventory records. So these are the about cash and bank balances and the fixed assets and the revenues and the expenditure and also inventories in the audit format of the audit program. So these kind of formats also they follow for the verification of each accounts and each books for the completion of the audit program. So these are the major cash and bank balances are representing the major transactions, and the fixed assets also representing the major transactions. Revenues also reflecting the major expenses and the inventory. These are the major areas of the key areas, nothing but key areas of audit procedure, and they has to follow. The audit team has to continuously follow this. And most of the time, cash and bank balance uh, are verified by the audit staff, and also fixed assets are verified by the audit senior, and the revenues verified by the audit assistant, and expenses verified by the audit staff, and the inventory is verified by the audit manager. These are the audit uh, team how they are allocating their work for the auditing procedure. So it is about auditing format program. We discussed today about audit procedure steps and also commencement of audit, audit planning, uh, audit program, model format of audit program. Let us discuss one by one once again for the quick revision we have to do. First is about audit procedure. What are the audit procedure? It is understanding of the client business nature and establishing the terms and about the risk assessment and identifying the key areas and developing of audit plan and also collecting the proper evidences and testing the internal control of the financial transactions and forming an audit opinion about the preparation of report. So these are the audit procedure steps. Uh, and also commencement of audit. How audit will be commenced, acceptance of the audit engagement. If any proposal means, if any in annual general meeting they are appointing, if any they are proposing an auditor to the verification of the books of accounts by the shareholders, with that proposal acceptance of the audit or audit team has engaged, that audit program will be commenced with the discussion with the client and understanding the client financial transactions and the financial structure of the business and after reviewing audit reports and management letters before going to commencement, auditor has to follow with these three steps: acceptance and understanding and reviewing of the previous steps, and also audit planning. Audit planning, we discussed about the major five steps involved: setting audit objectives and the scope, identifying the key risk areas and materiality of the levels, and also planning of the audit timeline and the resource allocation and coordination among the team and the management and developing the audit strategy. Final step. So, and also audit program. Audit program, how audit program, detailed checklist and the specific needs and risk profiles and verification of liabilities, income, expenditure, and also continuation of the monitoring and update of audit progresses. And also model format of audit program: cash and bank balances, cash and bank accounts, and the fixed assets, the revenue, expenses, and the inventory. These are the key areas to be verified by the audit team, and the audit procedures also involved. But each category of the ledger, they has to follow different types of vouchers and the books of accounts they has to verify. So with this, we are going to conclude about this today's topic, and tomorrow we will discuss a new topic. Thank you.